Welcome to The Organized Expat, brought to you by Tytle, the platform for expat taxes. Hi everyone, welcome back to the show. Today it's tax simulation day. We're going to pick one country, in this case Portugal. We're going to run the numbers for 5 different profiles. And the profiles, they differ in income level, source of income, profession, and so on. And as said, in this episode, we'll look at Portugal and we'll explore how those profiles, how they play out in the Portuguese tax system. And we'll do that both assuming that you're a regular taxpayer, so falling under a regular tax treatment, and if you fall under an expat regime. In the case of Portugal, that's the famous NHR regime. So we're going to look at both, let's say, angles. And as always, I'm going to do that together with Laurens, who is an expert who knows everything about taxes and in particular expat taxes.
Hi, everyone.
Hi, Laurens. So let's get started. So today we're going to have a look at Portugal and then 5 different profiles. First one is employment income. So making 36,000 euros a year as an employee in Portugal. How does Portugal treat you if that's your income? And then we're not going to have a look at expat regimes or expat benefits, just the regular treatment.
Right. So if we look at the regular treatment first, what you notice is that Portugal has a progressive tax system, and that means that basically the more you earn, the higher the tax rate will be.
Yeah,
there are multiple, actually a lot of tax brackets.
Which is quite common.
Which is very common, of course. But because you mentioned NHR already, that's a flat tax.
Yeah.
So the standard treatment is a progressive tax system, and NHR, which was ended, by the way, 1st of January of 2024, there was a flat tax rate.
Yeah.
If you
and NHR, maybe that's good to repeat that here. That's a regime that was hugely popular because it offered big benefits for expats. But now it's limited only to people working as researchers. Or
exactly. So in academics, researchers.
Yeah.
So it's maybe only now, 4 or 5%, I think, of the previous list of high value adding professions. But yeah, exactly. So if you just have the normal standard treatment in Portugal, you're earning 36,000 a year on a regular job.
Yeah.
Your net pay will be around 22, 23K.
Okay, so that's what you will take home after tax.
After tax and after social security contributions as well, because employees contribute 11% as well. So it's around 22.
And it's interesting to see because we both have a table here on a piece of paper. Listeners don't see that, of course, they can't hear it. So my question would be, is it normal that you have so many tax brackets? Because I really see so many. It goes from, what is it exactly? From
8 or 9
13%, 18%, 23%, 26%. 32, 37, it's really a lot.
No, so I wouldn't say that's normal. If you look at other countries, Netherlands or Italy, it could be 2 tax brackets, 3 or 4 sometimes.
I know that Italy only, I think, has 3 rates.
3, I think 3 as well, indeed. 8 or 9 tax brackets is not
that's
very
really
normal.
A lot. Yeah.
I would also say maybe it makes things a bit harder as well for tax authorities, even though all those systems are automated. But sometimes you see, and we're both from the Netherlands, with a small change in the tax rates, what kind of administrative problems it could cause, for the tax authorities. But no, this is definitely something
complicated,
quite unique, quite complicated as well. After tax and after social securities, you would pay around 14K in taxes and social securities. So
because if you make 36,000 euros a year, then you go all the way up to which bracket? To
that is the 7th, the 6th or 7th. So to 37%.
37%. That's the highest bracket.
Exactly, and on this income, that's what you call the marginal tax rate. So for every extra euro you earn, you pay 37
will be taxed
cents.
At
exactly,
37%.
So then you know if you, for example, if you can earn some extra money. If you work more, what you're going to pay in taxes over that extra earned money.
Yeah, and I think that's an important principle that it's marginal, meaning that it doesn't apply to your whole income. It only applies to the highest bracket.
Exactly,
so yeah, okay. Social Security is 11%. That's a lot, or
I would say it's quite normal.
Quite normal.
Exactly, yeah. So in other countries in Southern Europe, you see higher Social Security contributions, but it's always communicating vessels with the tax rate.
Yeah.
So sometimes you have very high tax rates, low Social Security contributions, or the other way around.
And
it
in
depends
the end,
a little bit.
It doesn't really matter because, if it's low for the Social Security and high on the tax rates, then the outcome is the same. And in France, I think it's more than 20%.
Yeah, it's 22%.
That's steep, yeah. But then the rates are lower, probably.
Exactly.
Yeah. Okay. So NHR is a little bit less relevant now because it's only for certain professions. Would it be interesting for the listeners to know a little bit more about the outcome?
Yeah, well, I think just the difference between NHR and the standard tax regime is still interesting to look at. Also because, I mean, you have some people that still do get NHR, the academics that we refer to.
Yeah, sure. Yeah.
I'm not even sure if they're listening right now, but
hopefully they are.
Would be nice. But yeah, with NHR, there's a flat tax of 20%.
Yeah.
And then you also need to pay Social Security contributions. So what we used to hear quite often from clients at Tytle is that they thought it was just 20% and that's the end of it. But of course, don't forget about Social Security.
Oh, that's on top of it. Yeah.
Yeah. And then, of course, people sometimes paid Social Security back home if they moved from another country and if there was some kind of Social Security agreement. But on this income, 36K, you would take home around 26K. So that's already higher than
than the 22K.
The 22, yeah. So
but 22,000 and 26,000, that doesn't strike me as, let's say, a huge benefit that you're getting.
Exactly. So also because it's a flat tax,
Yeah.
The higher your income, the higher your advantage will be. So if you earn 200K, for example, then NHR is extremely advantageous for you.
Then it really kicks in.
Exactly, yeah.
Yeah, okay. Here, not so much. But still, of course, it's 4,000 more that you take home than if you have the regular treatment.
This is also probably one of the reasons why, I mean, Portuguese people were not too happy about NHR. And you can also see why if we're really looking at the numbers.
Yeah.
Because your American neighbor has some more money to spend.
Much more money to spend and doing exactly the same. Yeah, so that's unfair in the eyes of many Portuguese. That's why they abolished it. So going to the second profile, pension income.
Right.
Also 36,000.
Also 36K. So you would say in principle for the standard tax rates, nothing changes too much apart from the fact that you don't pay Social Security contributions over your pension income.
You do pay. You do not pay.
Don't.
Okay, yeah, exactly. That's important difference also.
Exactly, because you've already paid those while you were working.
Sure, yeah.
And so then your net income will be higher. So it would be around 27K.
And that's already for standard treatment.
That's the standard treatment indeed. Yeah. So people that go to Portugal right now, so they don't have NHR, they will, as in this will be relevant for them. So this 27K, because if you go to Portugal now, you will just have to pay the standard tax rates in Portugal over your pension income. Still, people think that because the pension was built up abroad, that they have to pay taxes over it abroad. But Portugal just sees the pension income as a taxable thing in Portugal.
Oh, okay.
So and that's also very standard.
Is that really the case that Portugal sees it as, let's say, because I thought sometimes you pay in the country where the pensions come from, sometimes you pay in the country where you live. It depends really on the country and the country with which Portugal has a tax treaty, or not?
I mean, that is also true, but in general, so Portugal just taxes pensions under Portuguese domestic law, and then there could be all kinds of rules with other countries in the bilateral agreements. In the tax treaties.
Okay. So it really depends on the
I mean, you used back in the day, you had, for example, Dutch people that love to retire in Portugal because the tax rules played out in their favor, but most of that is repaired already.
Was it 0% that they paid or not?
I believe it was 0 indeed.
At some point.
Because there was some kind of double non-taxation that arose. But it was before, I think 2009 it was repaired.
Okay.
This little tax scheme of Dutch people going to the Algarve.
Okay, yeah. And then it was raised to 10%, I believe.
Okay. Yeah. So the 10%, I believe that's so with NHR.
Yeah.
And yeah, indeed, NHR used to exempt pensions, indeed. But then they raised it to 10%. So that basically meant that if the tax that you paid abroad was lower than 10%, then Portugal taxed it up until 10%. But for people that come to Portugal right now, they will just have to pay the standard tax rates.
Yeah.
And then, no social security contributions in principle.
Yeah. Because that takes us to the, let's say, we talked about the standard treatment of pension income at 36,000. NHR treatment would be 10%.
Exactly.
Okay. Yeah. So that's...
in most cases, they already pay a tax that's higher than 10% abroad. And it'd be good to mention government pensions are mostly, those pensions are actually taxed back home. If you build up, let's say, your government pension or a state pension, if you were, let's say, a teacher at a public school in Arizona, let's say, then those are taxed in the US.
Yeah. So let's go to the third profile, which is a remote worker.
Yep.
And the remote worker makes a little bit more, 60,000 euros a year. So what's the standard treatment for a remote worker?
Right. So with 60,000 a year, you will, of course, fall in a higher tax bracket.
Yeah.
When we're looking at the table here, your marginal rate.
One of the 20 brackets. No, that's a joke. It's probably 7 brackets or something, but a lot. Yeah. So
the marginal rate here goes to 45%.
45%.
Exactly.
Which is not the highest rate.
It's not the highest. 48% is the highest, but it's over 80,000 more or less. So I mean, remote worker. You can of course be a remote worker and be employed, or a freelancer. So that also changes things a little bit.
Remote worker and being employed.
Yeah, so you can be
as a contractor for a company, or
no, I mean if you work remotely.
Oh, I see what you mean. Sorry. Yeah, sure.
So I mean it's could have two meanings. The remote worker, but let's say if you work for a company, it could be in another country, it could be in Portugal, doesn't really matter, but you work from home as a remote worker, or you could also be a freelancer. And then the taxation is slightly different. But when we start with employment, you see that the net pay would be 34,000 after tax, after social contributions. Which I would say is also quite harsh for 60,000 euros.
Yeah, that's very harsh, because it's, how can that be that it's almost in half? It goes, it's almost 50%, but
it's because of the social security contributions as well. And then if you're a freelancer, you could qualify for the simplified regime in Portugal, which means that 75% of your total revenue is your taxable income. So the assumption.
So now we're only talking about freelancers, so people who are not employed, are not under an employment contract, labor contract. For those people, and only for those people in Portugal, there's a simplified regime, meaning that your taxable income is 75% of your total revenue.
Exactly. So the assumption is that 25% of your revenue, that's expenses. That's why it's a simplified regime as well. And then your social contribution is a bit higher, which is 21.4%.
Okay.
And then in general, what it comes down to is that your net pay would be around 37,000. So it's a bit higher, of course, than if you're employed. So taxation for freelancers is slightly more advantageous than for employed persons in Portugal.
Okay. That because 21%, so then the total would be, that's a calculation that you can do yourself. But most important here, 75% means that you get direct cut at 25% cut from your taxable income. You go down, and then you probably go down a few brackets in Portugal, given the fact that there are so many brackets.
Exactly.
And then you will pay less. And that's a standard treatment. It's still standard because it's available to everybody. All freelancers in Portugal can take advantage of that treatment. But if it's under the NHR regime, how does it play out there?
Right. So with NHR, and again, this ended 1st of January 2024.
Yeah.
And you needed to have a high value adding profession. So there was a big list of all kinds of professions that the Portuguese government found interesting enough to give you a tax break. Then the net pay would be around 42,000.
Oh wow, that's considerably more.
Exactly. So you also see the higher the income, the bigger the differences between NHR and the standard regime.
Yeah.
And here again, it's 20% flat tax and social security.
Yeah. Yeah. Because there, if you compare that with, let's say, the 34,000 that you take home under the regular regime, so not considering the freelancer benefits, then that's a huge difference. Yeah. Or huge, quite a difference. Okay, next profile that we would like to look at is the crypto trader. And it looks like we're going up in income, right? It's 78,000 here.
78,000. Okay. Right, so Portugal used to be the paradise for crypto.
Yeah.
Because there wasn't a crypto tax. The law changed slightly, which basically means that if you hold your crypto longer than 1 year, it's still untaxed. Yeah. But if you do short-term trades, so within 1 year, then there's a standard tax, which is 28%. It's the same rate as the capital gains.
And the rationale is that you're a trader, so you're working with crypto, and then it's business income, and otherwise it's more something that you hold as an asset, or...
Exactly, I think that's what's behind it. I mean, of course, when you hold something else as an asset and you sell it, then you do need to pay capital gains tax as well. So I think they also just want to keep things friendly a little bit, attract lots of crypto people that come to Portugal. Maybe those people also have other kinds of businesses or startups. You see that.
Exactly. It's a younger crowd, generally speaking.
Yeah, and I think if you compare it to the other countries in Southern Europe that have aggressive expat tax regimes, Portugal doesn't anymore, then all those countries do have some kind of taxation on crypto. So Portugal really stands out here with a 0% for long-term trades.
It's interesting to see worldwide that politicians are courting the crypto people. So with all kinds of promises, also in the US right now, it's a debate about how to treat crypto traders and their income. So no longer a crypto paradise here in Portugal, but still, let's say, we should have a look at it, right? What you take home before we say that it is.
Let's say that the thing is, if you have a crypto income of 78,000, then I mean, of course, there could be a part short-term, a part is long-term trades. But if we just assume that everything is long-term, of those 78K, then you don't pay anything in tax.
Yeah.
And in the worst case scenario, you would pay 21,000 in tax if you're day trading every day. And get a 78,000 profit.
Okay.
And then, of course, there are some other rules on crypto. So, for example, mining, how that is treated. And I mean, in a lot of countries, you saw that there wasn't, it was not clearly defined in the law because all these concepts are quite new. So crypto is quite new. So lawmakers didn't really anticipate it.
And mining means that you use your computer to do the difficult calculations in order to gain currency. And maybe it's good to define that also for the people who don't know what mining is. But then you're not trading with crypto, but you're creating out of nowhere, not really nowhere. It's out of calculations, solving difficult puzzles, and then you get some crypto in return for that.
Exactly, and the rates there for mining, they go up to 48%. So I think the rationale there is that it's just seen indeed as active labor that you're doing to get that. So it doesn't have the passive element anymore that cryptocurrencies otherwise would have.
Yeah, it's so that also more a business that you're running.
Yes, it also justifies different taxation.
Wow. And it goes all the way up to 48%, so the highest bracket.
Exactly, for mining. Indeed.
Yeah, for mining, And then you have staking mining, is that the same? Or, let's say that's a little bit too technical because we also have another profile to discuss.
Exactly.
Can we go to that profile, or do we need to say something about NHR?
So NHR, I mean, that doesn't really change anything for cryptocurrencies.
No?
No, because I mean, and that's interesting as well. So what NHR does is it exempts foreign sourced income. But cryptocurrencies, it's quite hard to tell what the source of the cryptocurrencies are because the blockchain is in the cyberspace.
Yeah.
So it's hard to say, for example, these cryptocurrencies come from Sweden, for example.
Yeah.
But in general, and that will also be part of the fifth profile, capital gains, cryptos, that's always seen as Portuguese sourced if you live in Portugal.
Okay.
So NHR doesn't really play a role here.
Yeah, okay. So crypto country doesn't exist. That's for sure. Number 5, investment income. And now we're really going up to more than 100,000, 120,000 per year investment income.
Right. So you can think of everything, capital gains, dividends, interests. For all these categories, the tax is 28% again in Portugal.
So for example, let's say somebody buying shares and selling them at a higher price makes 120,000 as a result.
Yeah.
That's
should be 28% in
that's
tax.
A capital gain. That's an investment income that you have then.
Okay. Yeah, and over capital gains as well. Even with capital gains, if you live in Portugal but you sell your Dutch company, then Portugal still sees that as a capital gain in Portugal because you live in Portugal and the tax treaty assigns that capital gain in most cases to Portugal, to the home country, apart from real estate capital gains. Those are almost always taxed in the country where the real estate is located.
Yeah, that's an interesting, not even rule of thumb. I think it's almost an iron rule that everything that's real estate related is always assigned, or the right to tax, the right of taxation is always given to the country where the real estate is located, which makes sense because that's also the country that's providing all the facilities. It's providing, building the roads, making sure there's police, electricity. So it makes sense. Okay, so what do you take home in the end? 120,000 investment income, standard treatment in Portugal.
Would be around 86, 87,000.
87,000. Yeah, okay. Which is quite decent.
Yeah, I mean, I think in Europe, the tax rates for example, let's stick to capital gains right now. It's mostly between 20 and 30%. Some countries, you see a bit of a tendency that countries want to tax capital gains and more passive income in exactly the same way as labor income, because they want to bridge that gap a little bit between capital and labor. So you see that...
That's maybe the whole discussion after Piketty, right? He was one of the people, one of the economists who said that the emphasis right now when it comes to taxation is far too much on labor, and that's not really fair because apparently it would be better if you tax capital a little bit more.
Yeah, and that's what we are also going to see in Spain in another video, for example, is that the more capital income, that they have progressive rates for that. So in most countries you have a flat tax, so also in Portugal. But I think it's 28% is quite standard in Europe. You have some countries, of course, that don't tax capital gains. Think of Belgium, for example, in most cases.
Belgium doesn't tax capital gains at all?
Exactly. In most cases, as in there are some exceptions. But as a rule of thumb, they don't tax capital
Standard
gains.
rule, they don't tax it. Okay. Now the NHR angle. So looking at it from an NHR angle, what does that outcome does it lead?
Indeed, is foreign sourced income under NHR is exempt in Portugal. So if you had dividends, interest, royalties, etc., from abroad, and Portugal had a double taxation agreement with that country, then it would be exempt in Portugal. Of course, you would pay.
And Portugal has a double taxation agreement with many countries.
Yeah, exactly. And even if they don't, then you look at the, maybe let's not make it too technical, but the OECD model treaty. So there's also a fallback option even.
Okay.
So let's say if you got dividends, interest, royalties from another country, you pay tax over them in that other country, and you would still have to report them in Portugal, but Portugal exempts it.
Okay.
For capital gains, that's different because Portugal sees capital gains as Portuguese sourced income, not as foreign sourced income. So that's why you often see that people think when they sell their company back home, but they already live in Portugal, that they think that this, that should be exempt under NHR, but it's not. And then if you report it, the Portuguese authorities are going to probably tell you, okay, this is just taxed in Portugal 28%, maybe you've already paid tax over it back home, and then you have to repair that situation.
Okay, yeah, that's good to know for people, because that's quite confusing.
Exactly. So what we see very often, indeed, with capital gains is that, and with NHR, and maybe NHR is not as much of a thing anymore, but they thought that whenever you had a capital gain abroad, that it was taxed abroad, not in Portugal. But with capital gains, it's in most of the countries it's different. They see it as something that should be taxed in that country.
Okay, yeah,
that's something Portuguese sourced.
Yeah, that's indeed good to know. So then I think we've covered all the profiles, right?
We did, yeah.
Also, from an NHR perspective, is there anything else, other information that we need to share with the listeners?
Just quickly mention, but we already did that a little, because we mentioned NHR a lot, and NHR still exists, but it's just in more of a skinny version. So right now, the new NHR regime is just aimed at professionals in scientific research, innovation, technology, R&D, etc. So most people will not qualify for NHR anymore. But yeah, the fundamentals for that new regime are still the same. 20% flat tax. It's just not as accessible as it used to be.
So I think we can leave it there for today.
Yeah.
And which other countries are we going to cover in this series?
We're going to cover quite a few countries: Spain, Italy, Greece, France. But of course, if listeners would like to see another country covered, they can just email us at hello@tytle.io. And also, if they want to see another profile covered, we can easily do that as well.
Sounds good. Okay, so thanks for listening, and see you next time.